Do you dream to retire before your parents or see minor children under your care retire as millionaires? Then, folks, you are in the right place. Assalamu alaikum and peace be upon you. Welcome to the Muslim Women Invest podcast. I am your host, Dr. Miral Azam Khalil. For the greater part of the past decade, I have invested in the US stock market, US farmland, and real estate, put over 100 families towards creating generational wealth through minor investing. In this podcast, we talk all things money and empower Muslim women to take steps towards financial freedom through busting myths and small, bite sized, actionable steps. So let's begin, starting with the dua of Hazrat Musa alayhi salam, our Prophet Moses. رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقهوا قولي. Bismillah. The topic for today is what is a NASDAQ rebalance and earnings news for this week. My name is Dr. Miral Khalil and I am your host for today. Does any one of you invest, Sabah or Basma, before we begin? There's somebody else. Nasreen is here. Assalamu alaikum. Okay, so we have a mixed crowd. Nasreen, if you can hear me, please put a yes. And let us know if you invest in the stock market at all or no. Okay, perfect. Let's begin. أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقهوا قولي. I always begin with Hazrat Musa's dua and the istiyada so that you guys are able to understand whatever I'm saying, and if it's beneficial to you, it sticks with you. If it's not beneficial to you, it doesn't stick to you. Let's begin our session. There's always a disclaimer that this is for educational purposes only. It's copyrighted material. This is not financial advice and no client relationship is assumed. So what is the NASDAQ 100? I'm not sure if people are familiar with what is the NASDAQ at all. So NASDAQ is simply an index that follows the top 100 companies that are not based in the financial sector. So most of all, it's easier to understand in simple terms that these are major technology companies. For a layman, you can say Adobe, Apple, Netflix, Tesla, NVDA, these major tech giants, the top 100 tech giants are followed by the NASDAQ 100. It's often used as a proxy for growth stocks, which means that the NASDAQ itself follows more than 100 stocks. But these top 100 stocks are the ones that are really fast paced, they're really growing. They have a faster growth than the rest of the sector. They have a faster growth than the rest of the market. So this is a special index, and this is not the NASDAQ composite, which follows more companies. This is just the top 100 tech companies that are followed through the NASDAQ 100. Now, this is not a really commonly, followed through index, but a lot of companies that are looking for high growth and a lot of hedge fund managers are looking at the NASDAQ 100. Why are they looking at this particular NASDAQ or a composite of 100 companies? Is because they really want to increase their growth, or they're looking to diversify in technology, in the technology sector. They're even looking to diversify even further. So for example, NVDA produces chips. The Taiwan Semiconductors produces semiconductors. Adobe is a completely different company. Netflix is a completely different company. Cisco is a completely different company. So within the technology sector, there are companies or businesses that are doing different things. The reason why hedge fund managers or portfolio managers, let's break down. Hedge fund managers and portfolio managers are simply companies that people
give money to and pay fees so that they can manage their assets. What this company is basically doing is they are investing your money in different indices in different companies, and they're trying to beat the market, and they're trying to get more return for your money and more bang for your buck. um, by following this NASDAQ 100, these hedge fund managers are able to diversify your portfolio. So they're not only, they don't want to invest in just one single simple type of fund. They're looking to hit a lot of sectors within one sector, so that your um, portfolio is diversified. And simply the reason is that they don't want to put all of your eggs in one basket. They want you to diversify. They want the risk to be minimized. And simply, the NASDAQ 100 or the top 100 technology companies have rallied. Rallied means they have increased in their stock price. They have the return for them has been 46%, which is much higher than the S&P 500, which has only jumped 19%. I would say the S&P 500 has not even jumped 19%. It is 18 point something percent, but this is a roundabout figure that I am giving to you. Typically speaking, the S&P 500 is really hard to beat year over year. And so what people are looking for is that a 46% jump is a really huge increase. And this is why the NASDAQ 100 is rebalancing. Why is it called a special rebalance? And why should you care about this? It's a special rebalance because these 100 companies are rebalanced quarterly. But this is beyond a quarter. This is a special rebalance that is going to happen tomorrow. And what does that means in simple terms is that the big companies, they're called the magnificent seven stocks that have been rallying in the first part of 2023, which include NVDA, Microsoft, Meta, Tesla. I think there are two more that I'm forgetting, two, three more. So these stocks have rallied so much. They have increased their stock price so much that they have left behind the smaller technology companies, and they are between these seven companies. They are more. They are now considered over. They're now a part of more than 50% of this NASDAQ 100. And so this creates a big risk because instead of the NASDAQ 100 being diversified, instead of it following different types of technology companies, only seven companies are dominating it. And so it increases risk for portfolio managers, and it increases risks for people like you and me. It is really good for the NASDAQ rebalance is not good for day traders, but it's good for people who are investing in mutual funds or index funds or EFTs, because it is decreasing their risk. What's going to happen is simply that these seven companies, which are now over 50% of the NASDAQ 100, they are going to bring it down to 46%, I think, which is still a significant portion, but it's less than 50%. And more weight is going to be given to companies like Netflix and Adobe. So if you are an investor in Adobe, you might see a price increase tomorrow. And if you are an investor in Microsoft or Meta, you might see a slight price decrease. Now, I want to give a disclaimer that the market doesn't simply just, or the equity prices or the security prices of any particular company doesn't simply just go up and down by the NASDAQ rebalance. One of the biggest factors that moves the market is not just one factor, it's multifactorial. So the FRB, which is the Federal Reserve Board, is also going to announce if they are increasing the interest rate next week. That's going to be a factor. The personal consumption index, which is simply the Federal Reserve Board looking at the consumer goods prices, what that has been. That is their favorite index to see if the inflation is in control or not. That's another factor to look at. The NASDAQ rebalance is just one of these factors. So, in my personal opinion, there is going to be market volatility tomorrow, but simply speaking, it's not going to be just the NASDAQ 100 that is triggering this market volatility. There's going to be a lot of other factors, like a lot of earnings are coming out as well. And so the NASDAQ 100 rebalance is important for people who invest in mutual funds and day trade, and EFTs and portfolio managers, because it's going to create an environment where it is less risky for investors, and not a lot of weight is concentrated at only 7 companies. In the stock market, diversification is everything, because if you have all of your eggs in one basket, it's not looked upon. It's really risky. It's a very aggressive portfolio, and normally this is for very seasoned day traders. And so let's continue. So the $1 million question is always, will the rebalance affect the security price? I already went through this. The security price, or simply the stock price of a company, is not only affected by the rebalance because it happens quarterly. It's also affected by the financial environment of the country in general. And so on the 25th, when the Federal Reserve Board announces if they are looking to hike interest rates further to bring the inflation down, that is also going to cause the market to be volatile. The rebalance is going to cause the market to be volatile. The earnings, which is simply a company announcing their quarterly profit, which are big company names like Microsoft, Meta, First Solar, they're announcing it this week, is also going to cause volatility. So there is not just one factor, but as investors, we need to understand and we need to know these things. We need to read about them. We need to not be scared of these fancy terms. Instead, we need to dissect and see that, okay, if this is happening, how can I minimize my risk? How can I proceed further? What are other stocks that can rally? One of the stocks that I have seen going up, and this is not financial advice, but this is just something to look for, is a company that's working with Tesla. It's called Rivian. Another stock that is going up is called United Healthcare. Obviously, a lot of people don't know about this because it's not a technology company, but United Healthcare is one of the biggest insurance companies in the United States. They 10 days ago, they beat their earnings and the price of the stock went up $45. Having said that, the NASDAQ rebalance has allowed me as well to look for other stocks that are undervalued, that have not reached their peak, that can make me money. Because honestly, I'm also tech heavy. I feel the Islamic funds that are also, they are also tech heavy. So if you invest with the Islamic S&P 500 funds, I forgot, it's gone over my head. There was a fund that I was going to tell you about. It's going to come back to me. Anyway, they're also tech heavy. So having said that, look outside of technology. This is a really good time for you to look at all the earnings that came out. United Airlines did really well. Just so you know, I'm just giving you out examples. I think the renewable energy like First Solar is going to do really well. Look for look for transportation stocks like Sea Transportation. There's a company called Seagan. Look for other stocks, like there's a train company called the Pacific something. I'm just trying to tell you is that this is a really great time to diversify. The rebalance actually is an opportunity for you to look outside of tech and see where can you make money. And so reading about the news, reading how the companies have which companies have done well, looking at the comparing with the past year's quarterly earnings with this year's second quarter earnings is a really great way for you to diversify your portfolio. And what I tell people is that just because it's a fancy new term doesn't mean that we cannot educate ourselves, and does not mean that we need a PhD. So please don't be scared, and look for answers. And it's like we have to start somewhere. So this is a good opportunity for you guys to go into your portfolio, or if you do not invest now, it's a really good time for you to simply type uh, earnings, second quarter earnings. I can write it down and make a watch list. What I ask my 9 almost 10 year old son to do is that he has a watch list, and I go over with him what he's looking for in a watch list. And if you do this enough times, even he is able to see which company is doing well, which company is not doing well. The reason why I give this example of my own son who is very young is because if he can understand this, we are old enough and we have more knowledge and more know-how and more research skills to understand what is going on in the economy. So it's never too late, and I really highly recommend that if you have kids or any minors under your care, and if you want them to be financially literate, have them sit down with you, and the least they can do is literally form a watch list. So the actionable step for today is you're going to go and type second quarter earnings in Google. It's going to come up with a list of companies that are showing earnings every single day. Let me see if I can share my screen and I can show you guys how to do it. It's pretty simple. Um, and this is for people. Okay, is it allowing me to share my screen? Okay, perfect. So basically we're going to go and we're going to type second quarter earnings. So this is just for one. Let's go to Yahoo Finance, or you can simply go to Yahoo Finance, second quarter earnings, uh, company earnings calendar. Are you guys able to see what I'm showing? Can you type a yes, because I am out of my screen. I think you guys are. Okay, simply. So basically, if you go into Yahoo Finance, type company earnings calendar, you can literally just um, pull this up. This is not a big deal. And as you can see on the 24th, all of these companies are announcing their earnings. There's so many of them, as you can see. Barnes and Noble, just something that we all know about. Bank of Hawaii. But let me show you on the 25th, what the company that I am following is Microsoft. So when is Microsoft is supposed to declare their earnings? On the 25th. Let me show you, where is it gone? Biogen is another company. It's a really good company to see. And it shows you that before the market opens. So it also shows you before the market opens means that it's going to have its earning before 9:30 a.m. The stock market opens every day at 9:30 a.m. Eastern Standard Time. Where is Microsoft? I think Microsoft is supposed to have its earning on the 25th. I can't find it right now. But it's here somewhere, I promise you. I think it's either on the 25th or on the 26th. Let me see Microsoft. It's supposed to have its earnings. So you can simply, if you Google a company, you can also click follow, and you can make an account on Yahoo Finance, and it's going to show you the stock price every single day. The stock market is auto overbought, and you can read about the companies right here. This is how people. This is a watch list. So you add companies to this list. For example, Apple, Amazon, Google, Meta, Intel, and it shows you the company's stock price. If it's going up, it's going to be green. If it's going down, it's going to be red. This is probably the day change. So you're not looking for the day change. Companies similar to Microsoft, Adobe, CrowdStrike, um, you get the gist of it, right? This is how you simply go to Yahoo Finance and you look for earnings, and every single day earnings are going to come out. So 268 companies are declaring their earnings on the 25th. 247 are going to be showing their earnings on July 24th, and this is how simply you go about and do it. I'm going to exit the share screen. Okay, and then I'm going to go back to my slides. This is simply, honestly, it's so simple. You can ask your son or your daughter or whoever wants to go with you, your probably cousin, sibling, your parent. There's no age limit to it, and you can quickly teach them. And if you see this every single day, I promise you, it's really interesting and you will surprise yourself. I promise you, you will surprise yourself as to how much you can learn just by reading every single day, just by following a stock, just by following the news. And so it also reminds me to give us all a reminder that as Muslims, the first ayah of the Quran, or the first word that Hazrat Jibreel taught Prophet Muhammad sallallahu alaihi wasallam was Iqra, read. And so I keep going back to it and thinking that reading is such a huge part in investing and overall in being successful. So if you are a reader, or even if you're a listener, if you listen to podcasts, any kind of way that you can gain useful information, um, it's really a plus, and that is what makes you a really successful investor. I have known a lot of investment bankers, I have worked with a lot of investment professionals. I will tell you one thing: they are always on the lookout for news. They are the first ones that are going to get the news about what's happening with the company and everything, because this is what, whatever happens in the global sense, like in the broad sense of what is happening in a country and what is happening locally and what is happening within the company, affects the stock market, the stock price of a company. And so the more well informed you are, the more educated, um, the more your stocks are going to be educated, and the more successful you're going to be as an investor, especially if you day trade. If you simply put money in the S&P 500 and let it grow, that is a really good way too. But in all honesty, what I have learned is that the more you read, the more educated investments you can make, and you really do not need a financial advisor. But on the other hand, if you want a financial advisor, it's really up to you. But I still believe even having a financial advisor, you should know what is happening in your portfolio. Yes, Tahreem. Green is an increase with a plus sign. Minus red is a decrease. But I'm not gonna go into the detail of the how long should we look at a stock price. You should never buy a stock based on anybody else's opinion, and also do not buy a stock just based on its day's performance. You're always looking for the history of that company, and it's more deeper than looking at the stock price and saying, oh, it's going up, so I should buy it. That is the mistake everybody makes. I have made this as well. And so this is a disastrous technique. I'm just going off track and letting you know. So look at the company's, at least look at its 6 months financials, look at how it's performed over the past 6 months before you put your money in. Okay, let's move forward. So simply speaking, I wanted to talk about what is an earning. We did a really long session on it last weekend, but the reason why I want to discuss it is because a lot of you might not know what is an earning. It is simply a company's profit in a given quarter or a fiscal year. Majority of the companies that trade on the public open market or on the stock market need to declare their quarterly financials to their investors. Why is this so? Because we as investors and other big companies have put their money in these companies, and so investors have a right to know if that company is meeting its financial goals or if it's not meeting its financial goals. That is simply an earning. If a company is in profit or if it's not. This is a simplified definition because there are other things that go into an earning and that go into deciding what the stock price for that company is going to be. But this is like a simple definition that you can run by, so that if somebody says a company's earnings is coming out, you know what it means, and and you can take the next step further. um, and so why is it important? Of course they're important, because if a company that I've invested in or you have invested in is not meeting its financial goals, then that means that company is not profitable. And if that company is not profitable, the stock price, instead of going green, which means going up, it's going to go red, which means it goes down. Now, the reason why I told you is to never buy a stock based on its performance for one single day is because the stock market goes up and down, it varies. What you have to look for, this is where earnings come in. If you look at a company's financial statement and look at how it's performed every quarter, you're going to have an understanding of if this company is worth investing your money in. And sometimes a company, so for example, Tesla and Netflix, really big companies, most of us know what they do. Their earnings were fine, but their stock prices went down last week, and because they are such huge companies and they did not perform as well in the second quarter, the whole market was volatile because of them. Netflix, the price of the stock went down $40. Tesla, the price of the stock went down $30. Why? It's because they did not meet their earnings. So typically, you can also keep investing in a company if the earning is not, if they did not perform well once in a while. So there are, the reason why I'm saying all of this is that there are many factors that you have to consider. And as you become more seasoned, you can write these down, and then you can say, what are my top 3 factors that I have to have in a company before I invest in it. For some people, it's a every quarter they're beating their earnings, they're profitable. For some people, it's how sustainable their growth is. Microsoft is a company which grows sustainably. Adobe is also a company that grows sustainably, which means it's slow and it's steady. A company like Tesla, because of Elon Musk, because of the leadership, is quite shaky. For some people, it's a really good investment. For somebody who plays it safe, not it's not a really safe bet, you know. So everybody has an individual personality, they have an individual risk assessment, and that is how you are supposed to make an investment. Something that is good for me is probably well suited to my personality is might not suit your personality, might not be worth a risk for you. Today is my first lecture. I would like to know about good Islamic stocks, please. There is nothing called Islamic stocks. There are companies that follow the NASDAQ, which is the technology stocks, which are halal, or they are Sharia based. For example, I will give you guys a breakdown of them probably in an email tomorrow. We are not discussing this right now, but I have noted this. I have noted your questions, Zartaj, and I will get back to you, inshallah. And what is earnings season? It's simply, honestly, every 12 divided by 4 is 3. Every 3 months, or January, February, March, April. Every 4 months, um, all the companies that trade on the US stock market, they're supposed to tell their investors how they have done. Are they profitable or not? It's simply that. And normally the earnings season is January, April, July, and October. So this is the second quarter, and the third quarter is going to be in October. What is interesting is that January is always the fourth quarter. So the first quarter is April and not January. This is something that is interesting, and I wanted to tell you. So July is the second quarter, October is the third, and January is the fourth. So the first quarter is always April. And so, yeah, these are the companies that are going to be, they have their earnings coming up, which is Microsoft, Meta, Alphabet, and First Solar. There are other big company names that are also going to be coming out with their earnings, but it's like you saw, there are over 200, and some days there are over 400 companies, and I cannot exhaustively list them here, but these are just some companies that you're familiar with. For people who are not familiar with Alphabet is the parent company of Google, and for people who are not familiar with Meta, it's the Facebook had a name change and it's called Meta right now. All right, so for any questions, you can email me. If there are any questions right now, please let me know. We are 9 minutes over our time. Thank you so much for sticking with me. And I will note them down and I will respond. But if you guys have to go, I must respect your time. You're more than welcome to, honestly, email me afterwards too. Let's see. Basma, Binesh, Nasreen, Sabah, Tahreem, and Zartaj. Am I missing anyone? Any questions? Anybody looking forward to any earnings? I know I am. Fazia, I think I don't know if she just joined or. Um, what is a good amount to start with stock investment? Zartaj, it honestly, it's a really, there's no simple answer to this, and it depends on how much you have after, do you have an emergency fund? If you have an emergency fund, how much money can you spare to invest? Nowadays, just let me tell you, you can invest with spare change. I have my children invest, and you know how much they make, close to nothing. So if you start investing with $5-10 and get in a habit of investing every single month, uh, consistency is the best thing when it comes to investing, and also time. So it really depends on your personal circumstances. Okay, Sabah, Tahreem, Nasreen, Zartaj. Where exactly do we buy these stocks? Um, Okay, Jazakallah khair, Basma. Tehreem. Okay, so this is the email, guys. You can note it down. And I will answer who said this. Tahreem. Okay, Tahreem, you can buy stocks literally on any platform. Fidelity, Charles Schwab, Vanguard, Robinhood. It doesn't matter. They're just banks. They're not banks. I mean, there are like banks. They are brokers which offer you all kinds of investment opportunities. You can simply make an account with any of them. They are free of charge, and there is no minimum. The reason why I started started teaching investing to families was that now that we have no minimum, and you can literally buy a fraction of a stock, which means you don't even need to buy the full stock. Some stocks are really expensive, like Costco. The Costco stock is $540. Not everybody has the money to buy that, even one share of that single company. What you can do is literally you can buy a fraction of that company, because you can put in the dollar amount. If you have $10, you can say, I want to buy shares for $10 for Costco, and it will be 0.00 something, but something is better than nothing. That's what I keep telling people. Don't let people tell you that you don't have XYZ amount of money. This is what keep people on the sideline. In real estate, um, what is in real estate, location is everything, right? You've heard of this. In investing, time is everything. I keep telling the story again and again and again for people who have not heard. Warren Buffett, who is the biggest investor, the most successful investor in the history of the stock market, started investing when the dude was 9 years old. So he started with a single stock. He was not born into a rich family. He started investing when he was 9 years old, and he started with single stock. And he, every year when you interview him, people ask him, why do not people copy you and become rich like you have a simple strategy. And he simply says, people do not have the patience to become rich slowly. So if you have the patience to create generational wealth slowly, this is a really good way to create money. And it's also halal. Many of the ETFs that are technology based are completely halal. Nobody's forcing you to invest in a liquor based company. Nobody's forcing you to invest in even in Netflix. You can invest in Adobe. You can invest in Microsoft. You can invest in um, these Sharia compliant stocks. And there's a list. If you Google it, there's like a list of ETFs which are Sharia compliant. So literally, there is no reason for us. Money is not the reason. Being Sharia compliant is not the reason. So the only reason is that people are scared because they think that there's a fancy term and they need to have a PhD, which you guys do not need to have. Sabah, my preferred platform is Fidelity, just because I have everything in it. But having said that, Vanguard is everybody wants to put money in Vanguard because their trading fees, which simply means that when you are selling or buying a security, is really cheap with Vanguard, and it's the OG. So they are the original brokers, and so Vanguard's fees are really, really low. They're close to nothing. And so I would recommend Vanguard, but honestly, now that the competition has increased so much, Charles Schwab, Vanguard, Fidelity, Robinhood, any of these are fine. I personally do not like Robinhood, but that's another topic. Um, and there's a reason why, because they don't have the educational material. All these other companies have a lot of educational material as well. And also remember, when you're investing, try to keep stick to one platform. So all of my kids accounts, my account, my husband's account, everything is in one platform. It's just easier on the eye, and you don't have to, keep a record of, oh my god, which username password for was for this kid and that kid. So just streamline it, keep it in one platform. The platform doesn't matter. What matters is, are you investing? That's my take on it. Okay, what else? Guys, we are 7 minutes over. I'm gonna end this call because it has to be uploaded on YouTube, and my YouTube audience has very little patience for such a long call. If you have any follow-up questions, please email me. And Jazakallah khair for sticking with it. We have more to come. The actionable step for you is, don't forget, go to Yahoo Finance, make a watch list, pick big company names and start tracking them, and have your kids track them. Do it with them. Do it. Start to involve your families, because it is on you. The educational system has no um, importance. They don't give any importance to financial literacy, and it's literally on us to educate people further, especially our own family members. Okay. All right. Assalamu alaikum.
I hope you enjoyed the show. Let's end our podcast with a very powerful surah from the Quran. A surah is a chapter of the Quran, and this surah is Surat Al Asr. I started my investing journey and began teaching investing because of this surah. Allah subhanahu wa ta'ala tells us that only people who guide people to the right way, to the truth, and to patience are the ones who are going to be successful. Let's end on this beautiful surah, and I will see you later. Bye from for now, guys. أعوذ بالله من الشيطان الرجيم. بسم الله